Hello guys, ICT gaps, fair value gaps, implied fair value gaps. These are all concepts that has been introduced, or rather that were introduced by ICT long time ago, and most recently, particularly ICT gaps and implied fair value gaps. These are relatively new concepts by ICT. Do they still work? Can you still use them? Or they were just a phase when ICT introduced them? Do people still use them? All right. Welcome to Mali Traders, and today we'll be talking about ICT gaps. And I'm not talking about implied fair value gaps, or other type of gaps theory. I'm going to be talking about specifically about a certain gap. If you don't know what these gaps are, you have to go back and watch some of my older video, or watch ICT's video about this concept. So to use this, you have to go to the lower time frame. All right. Although we at Mali Traders, we have our own indicator to mark out these ICT gaps, but you have to use it on a lower time frame. Okay. So today we'll be using it on ES or indices, any indices particularly. We can take ES for example. Go to lower time frame. Say 1 hour. Okay. Let's see what we now. As we can see here, you have to use it. You don't use it in isolation. All right. You have to use it according to. You have to use it in line with your bias and your narrative. All right. So if we plot this here, gap indicator, you can see clearly we have this in the middle. It went through the middle of this consolidation chop range, so it just blast through it. The point is, the problem is a lot of people don't know when to trust it. Sometimes they see it below price, they think once price comes there, they're going to long it, they're going to long it, or if they sit above price, when price comes there, they're going to short it. So more often than not, these people get wrecked. They don't know when to trust it. And when they say just go in between prices like this, for example, if you take Euro US, if you take any pair like this, they will say, oh, this indicator doesn't work. Maybe they will see this, oh, you only work this one time, and they don't know when to trust these ones. That is not how it works. So you have to have a bias. You must have a bias, you must have a narrative, and all the other things. Okay, if your bias already aware that, okay, this buy side was going to be tagged, so it makes sense that you're going to trust this right now. So this is just reinforcing these other PDAs that you would have found here on a lower time frame, on a much lower time frame. For example, if you go to the 15 or 5 minutes time frame, you'll probably find a breaker, or even 2 minutes time frame, you'll probably find a breaker block of other blocks or other PDAs on your entry time frame, if those smaller time frames are what you use to enter. All right. So if you're that type of trader that goes in, or rather that enter within this 1 minute to 5 minutes time frame, then you know when you can trust this. Regardless what, this works. Okay, so let's go back to ES and see how this could have been a good trade. It was a good trade anyway. So as we know, ES has been dumping, the market has been dumping lately due to bond and the dollar pumping. So personally, we traded this down, buy side taken here, and we had this additional confluence, all right, with this gap indicator right here. So when our bias is bearish like this, the first normal rule of thumb, our narrative becomes like this. Internal liquidity, like the 15 minutes or even 5 minutes or sometimes 1 hour, every up movement is a potential short to us, because we are trading the long-term trend. That is what we're trading. So most of the time we don't even look for longs. We just wait for it to go up, and then we're going to look for short, because that is more probabilistic, and that is a more trusted trade in our opinion. All right. So once it's going up, we'll just be looking for those high quality entry points. And when we have a gap like this, it just reinforces that zone. And that is how we would have used this in this situation. Okay, so we can try another. Today I'm just talking about gap, and which you can, you know what, let's just pop another thing into it. Let's see, for example, what other thing we have here. What session was trading at that particular time? Okay, this was London, right? So taking out Asian high and went up, and then what else do we have there? Okay, we have the CBD, we have, all right, okay, we have other levels there. Point is, it was tried for a drop down. Then our T2 indicator, what did it say? It gave us a sell just, let me click it, gave us a sell there. And if you go to the 5 minutes time frame, it gave us a triple SSS. So that combined with our gap indicator, when it goes above it like this, and then we are getting this telling us, okay, the price is gonna go all the way down. So we will know to trust this signal. All right, these are not signal given buy or sell things. I'm just telling you, showcasing some of our tools here, and specifically this gap indicator, and when we do use it, and to tell you that, oh yes, this that ICT introduced a couple of months ago, the concept still works, and I don't hear a lot of people talking about it anymore, because I think the hype just died down, so people probably forgot about it and they want to move on to the next new thing. You don't get profitable like that. The way you get profitable is look for the things that actually make sense to you, the ones that you can apply, that is easy for you, that you have mastered. Select a few things, a few concepts, a few PDAs, master it and stick to it. You still make money nonetheless. So we're going to choose another. Let's take Rusev, for example. So this is a clear example of how that would have played out. So if we choose, let's just take this and see what level we find here. Okay, I'm going to close the indicator out, close this, just put it here. I just want to see what higher time frame we were working around in this zone. Okay, all right, we were just around this low. Okay, and on the weekly, what about the daily? Yeah, we were just around this lower point. So we were inside this daily volume volume imbalance. So 4 hours, let's see. Okay, so no higher time frame lows or highs around there. This was just a chop consolidation and then a break of structure and then back. But if you take, I bet we have an OT around this zone. So I'm going to put the magnet up again and just, so clearly we were around the upper point of the OT. For a bullish OT, the upper part is usually the golden pocket. So we were trading around this zone. So when you combine that with this, that was just a top upper part of the OT, I'm just going to mark it out. It's often that people get this wrong. So I'm just here to remind you that don't forget this concept. They still work, and you don't have to jump into the next new thing. Sometimes continuously watching ICT might harm you. Actually, this is I'm not saying his knowledge is not good, but it might make you lose track of the other things that were working for you. So this is the OT. So the upper quadrant of it. So if you take this into 4, the 25% of this OT itself, because it's a longer range. So if you take it, you see the upper part of it, which is the golden pocket in retail Fibonacci level. Okay, so that is where the gap is. So if you combine both of them, you will see that you have a really good setup. Okay, so you could enter here and then place your stop loss around here, and then you will have gotten a decent trade up. All right, so how would you have traded this? Now let's see. Assuming, I'm just going to remove this. Assuming you properly marked out these levels. You say, okay, I have my OT, that is my OT zone, that is where I intend to enter. I'm just going to remove this and remove the remove that. Okay, so here I'm going to close this just here. So remove this this line also, so we have a clearer picture. So let's analyze this part. Okay, we go to a 15 minutes time frame. What else do we have there? This 15 minutes time frame. Okay, we can see it took out. I usually don't use the consequent encroachment on a lower time frame like this. I only use it on a daily, weekly, maybe monthly. So if you were a type that uses this, I see ICT using it on the 1 minute time frame. I don't use it on entry time frames, but just for argument's sake, let's just use it here, right? So you could, the point is you're looking for other points, other PDAs besides the sell side, besides the swing points, which is the liquidity. All right, so you're looking for all these other things like the consequent encroachment, the CEs of those wicks, of those candles. So you find that one there, and then you add it to your OT and you add it to your gap. Now you have 3 PDAs. So this area is a potential long gain area. All right, okay, so now we're going to go to a lower time frame to see how we could have utilized this as a potential long. So we go to the 5 minutes time frame. Now we're not using anything else, we're just using this concept. All right, so your liquidity was taken, sensor liquidity was taken here. All right, sensor taken, although it was first taken here again, and then taken here. Now what time is it? We are 2:30, right? 2:30, yes, New York time. Okay, that is after lunch. Okay, so if we look at this session, what session was it? Oh, no, it's not. Yeah, that's the session. Okay, so this is like, yeah, this was the lunch hour, and who was trading? Of course, it is New York session. So this is after lunch. Okay, so during lunch, the market trade down, take access our liquidity. So it's likely going to trade up again to attack buy side. All right. So you already mark out your levels, your zone that you want to trade from, that which is down low there. Okay, so you go to, let's go to the 2 minutes time frame. Right now we're just looking for entries. All right, looking for entry. By the way, at this point we already know that our TS would have given this SSB super strong buy, so it's telling you already that this zone is super strong. You should be buying from this zone. Now, like, this to me doesn't mean anything. This is just coded based on my algorithm, based on my strategy, and based on Mali's strategy and everything. All right, so it knows the zone which fits for a buy, and it knows the zone which fits for a sell. But we don't use that in isolation. You should never use anything in isolation. That we just use it to like, okay, for some form of confirmation. All right, that doesn't really tell me much. So market traded down into your level, it went up. Technically here would have been market structure shift. So at this up close candle here, although there is no wick, it can still be treated as a market structure shift. So your first market structure shift on the 2 minutes time frame was here. However, the main market structure shift was at this point. Okay, so you take this out. So this is your initial, or the one that stands out, market structure shift right there. Where is it? Where's my MSS? Right there. Okay, and then that is where you go. Here you have your fair value gap. So this is where you could have entered. Why would you trust this point? for two reasons. One, you got a low, a high, a low, a break of that. This, you have your breaker right here. So using your breaker and your fair value gap, combination of that, you got your unicorn. Okay, so I'm going to remove that. We have a template just for that. So it's a piece of cake if you think about it. If you just know what to do, when to do it, and how to do it, you got yourself a trade. So this was your entry. Just 5-10 minutes analysis. If you know what to do, when to do it, when to trust it, and there you go. If it makes sense to you, apply this concept to your trading, and if it doesn't make sense to you, try to learn it. Regardless of what, whether it makes sense or it doesn't make sense, you can come to our Discord, come to our Telegram channel. We teach this concept. This is what we trade with every day. Mali crew and me and my people. I have mentored over 30 students. Some of them have over 500,000 funded account, and we trade every day, live trading. We do market analysis, everything. So we look at these areas together before market starts. Now it's Sunday. We've already marked out what we're going to be trading tomorrow. So for example, if I go here, if I go to YM, it's just an example, right? So go to the daily. So this is what we do. Usually we take our levels. So we already marked our liquidity point, weekly fair value gap marked out. So is it going to be a draw? We don't know. Yes, we do know. We know where the market is drawing to. That's not the point. And then the Mali levels, we've already marked it out as well. So we know which way. If price come here, we know what to do. If price come here, we know what to do. So those are already marked out. What about the MTs, which is the Mali technical analysis? This is where the secret is. All right, so this is what we do. We take the levels, and then we do the TAs. The levels that is marked inside this point is what we intend to trade in the next trading session. So if you want to know how this thing plays out, come to the Discord, follow us on Telegram, follow us on Twitter, and come to our Discord and see how we apply this concept every freaking day. So for that, I'm going to leave you with this. Just know that this concept works on all. You know what, let me just show you one more. Let me go to I already show you. Let me go to foreign indices. I think, yeah, let me take this. This was a good example. This was a really good trade I was taking. This was a really good trade I was taking. For example, let's just plop it up. Boom. Buy side. When you have it like this, and it's green, even it's even telling you it's bullish. Oh, sorry, it's going to go down. No, that's a joke. The color doesn't really mean much. The color just means that, okay, if it gap down or if it gaps up, okay, that is what it means. That is what the color it means. And then you have the date of when that occurred. All right, so here we have the gap indicator. We have the gap itself here, and market was ranging here. So it went in there and then it came down. First there, then second, and then third. So you could have been shorting from here, shorting it like 3 times. You could have shorted this baby right here. Okay, so this is just another example of how you apply this. So if we look at DAX 30, the same thing. If I remember clearly, where's DAX 30? Here. So the same thing happened. We're able to buy from this. How would you think about this? Set side taking. You have to understand one thing, that price is only looking for 2 things: taking out liquidity and filling gaps. All right, this market is bearish. It's already bearish. Okay, so you could have like, okay, set this to yourself, where set side has been taken, what session was trading. Again, this is New York session. The same thing that happened on the other one, similar thing was happening here. So set side was taken here, so price went up, feed this fair value gap, rejected from this other block right here. Boom. So you long it and then you short it. Okay, depending on your risk appetite, you could have made a decent trade here. So This is how you could easily correct your drawdown if you're trading in prop firm and stuff like that. If you sometimes, if you, of course, everybody, those are trades, it's normal that they have drawdown sometimes. I don't trade prop firm. We have our own Mali equity and Mali funds that we trade and that we manage within ourselves. So if you're ever in drawdown, you could use this strategy to correct your drawdown. And if you don't know how to, just come to our Discord. We'll teach you from A to Z everything you need to know to be profitable, in our opinion. Right? Stop making it complicated. Don't let people tell you that, oh, this is so difficult. Yeah, trading is difficult, but people making it more difficult than it is. All right? Okay. I'm going to leave you with that for now, and then I'll see you around. I haven't made video for some time now. We've been working on other aspects of our businesses, and I'm going to be making more videos henceforth from maybe next week or so. Okay, I'll see you guys around. Subscribe to this channel, like this video, and press on the notification button so you don't miss any of our videos. They're all loaded with information. It's information overload. You're gonna have so much use of our videos if you just listen to it. Don't binge watch it. Listen to it and follow exactly what is instructed in the videos. All right, bye for now, guys.